Welcome to Weekly View on Markets. This week highlight was RBI policy. There was no change in the interest rate in the recent RBI policy, but markets saw a big sell-off after RBI policy, especially in Bank Nifty, because RBI wanted to reduce the liquidity. So RBI has announced that they will take steps to reduce liquidity in the market. Due to surplus liquidity in the market, short-term call rates in money market was higher than the repo rate. So RBI has intended to reduce the liquidity so that call rates are more or less at par with the repo rate. Because of this, there was big correction in the bank nifty. Another thing was that RBI banned Paytm payment banking operations, and that has impacted the sentiment in the NBFCs. We have seen corrections in most of the NBFC sector stocks, a big correction in Paytm stock. Market has become more volatile and there was a lot of profit booking on Friday in mid and small cap sectors. This is the end of the result season and a lot of mid and small cap stocks announced the results which were not up to the street expectations. So due to this, there was heavy sell-off on Friday in mid and small cap sector. But buying is seen at a lower level. Hence, there may not be a big correction in the market. Market may consolidate for some more time. Let us look at the indices performance during this week. Nifty closed at 21,782. It has lost 71 points. Closed with a loss of 0.33%. Bank Nifty lost 336 points. That is 0.73% and closed at 45,634. Even though there was big sell-off in mid cap Friday, the mid cap index has gained 412% for the full week and closed at 48,889, gain of 0.85%. Small cap index just consolidated with a loss of 9 points. India VIX has gone up sharply. It is at 15.44 and India VIX has gone up by more than 5%. We may see bout of volatility in the market in coming week also. Now let us look at sectoral performances. Most of the sectors gained during this week, except private banks was down by around 2.3%. FMCG lost about 2.27%. Consumer durables lost about 1.28%. NBFCs lost 1.13%. PSU banks were the biggest gainers. They are on a dream run for last 6 months. PSU banks gained more than 5%. Healthcare stocks, they are the hot favorites now in the market. It has gained about 4.44%. Oil and gas sector has gained 3.87%. Pharma sector gained about 3.5%. Media, energy, realty all gained about 2 to 3%. Commodities, manufacturing, information technology, auto sector all gained about 1.5%. So overall, market breadth was positive for the week. There were more sectors gaining during this week, but there was a lot of volatility in the market. Now let us look at charts. This is the daily chart of Nifty. I have not made any changes to the trend line, that is the channel I have drawn. And we can see market whenever it comes to the lower end of this band, that is buying, it is going up. And whenever it goes towards 22,000, that is the higher end of the band, there is a selling coming in the market, and market is trying to consolidate within this band. And I expect that, looking at the charts, it indicates that this consolidation may continue for few more weeks. This is the chart of Nifty Mid Cap Index. It is trading above the trend line which I have drawn. And on Friday, there was big sell off and it dropped below that. But good thing to see here, from lower levels, the buying is coming. This last candle has got a big lower shadow. It indicates that buying is coming at lower levels. It dropped to 48,000 level, then suddenly it has picked up back and closed at 48,889. So this indicates, the candlestick indicates that buying is coming at lower level, and this Nifty Mid Cap Index is likely to trade around this trend line in the coming week as well. This is the Nifty Small Cap Index chart. Here also we can see it is trading above the trend line. As long as it maintains above 16,000 level, I am bullish on this chart. And Friday sell-off was there. Again, we can see the longer shadow at the bottom, which shows that there is buying support at the lower levels. So small cap index is also likely to trade above the trend line, that is above 16,000 level. If it comes to 16,000 level, it is a good buying opportunity, and it will try to trade around 16,000 and 16,500 level. This is the chart of Bank Nifty index. Here also we can see support is at around 44,500 Bank Nifty, and there is resistance at around 46,000. And Bank Nifty will be technically strong only when it crosses this line, resistance line which I have drawn, that is around 47,200 level. Bank Nifty has to cross this level. After that only we will see strength in Bank Nifty. Till such time, Bank Nifty will trade between 44,500 and 46,000 level. Now let us look at some of the macroeconomic fundamentals of the market. RBI announced its bi-monthly policy during this week. So there was no change in the interest rate. RBI has expressed confidence that they will be able to manage the inflation in the band of 4.5 to 6% within that band. And that is the reason they have not raised any interest rate during this meeting. GDP estimate for the current financial year is around 7%. That is what is RBI has stated in the monthly policy. And what had happened recently in the money market is that the interbank call rates were slightly higher than, at a higher rate than the repo rate. So RBI has taken note of this, and they have stated that they will manage the liquidity. That means there is bit of surplus liquidity in the money market, which will be managed through variable reverse repo rate options. Reverse repo rate options. PMI index for the month of January 24 has come at, for manufacturing it is at 56.5, and for services it is at 61.8. So these are good numbers which indicate that the economic activity in the manufacturing sector as well as services sector is expanding and it is growing. USD INR rate is at 83.04. Dollar index is at 104.08. It has moved from 102 level to 104 level. That is why we see rupees again below 83 rupees per dollar. Brent crude price is at 81.44. So Brent crude price from around 76 level has gone to 82 level. Now it is at 81.44 dollar per barrel due to the problems in the Red Sea area. Gold price is steady at around 62,303 for 10 grams 24 carat. FIIs have sold 5,873 crore during this week. On few days they have bought, but majorly they have sold. And DIOs have been continuously buying. They have invested 5,327 crores during this week. So the week is going to be the last week of the result season. Generally, weak results comes at the end. So that will bring in more volatility into the markets. We may see volatility due to the end of the result season in the market, and also we may see some reaction due to the elections. There is something called a pre-election rally. So market may experience a pre-election rally for few weeks in the coming month. So investors should be aware of these volatility, but they should not worry about the volatility. The overall Indian macroeconomic fundamentals are quite good at this point of time. Our GDP rate is going to be good. That means the company's profits are going to increase, their business is going to increase. So these all will result in finally stock market going up. Investors should keep a long-term horizon and remain invested. This is all for this week. If you like my video, please subscribe to my channel, share with your friends. You can give your comments, ask questions, which I will reply. We'll meet again next week. Thank you.